Happy New Year. Probably the last time I could say that. Welcome to our new webinar, Diversify with DSCR, How to Grow Your Investor Business in 2022. It's a new presentation from Silver Hill. Really excited so many of you could register and join us for this conversation we're going to have. My name is Zach North, the head of marketing here at Silver Hill, and I'm joined by Joe Altamonte, our head of business development. Joe, can you say hello to everyone?
Hi, everybody. Really excited to share this with you guys today. Some exciting stuff from us, and we're looking forward to a really successful 2022. So thanks and welcome aboard.
Cool. So, agenda here, we have a lot to go through, and with this presentation, we're really excited to talk about it. DSCR solution, you're hearing a lot about that today, especially with kind of how the market's going, especially on the resi side with rates, with the amount of loans available, with what people are forecasting for 2022. I feel like the word of the year is going to be diversification, and that actually is very fitting for us here at Silver Hill. It's something we've always talked about. If you've worked with us for a long time, you know that we are always talking about diversifying with small balance commercial loans. Now, we're a much bigger company offering many different types of loans. And so we think we're a pretty good space here to talk about DSCR, what it can mean for you. Perhaps you're very familiar with it and you just want to hear what's new with our program. Perhaps it's something that's new to your business and you're just looking for that angle this year. And I think a webinar in January is the perfect time to talk about it. Especially since I think this is one of those topics when I'm talking to originators, people in this industry, it's kind of like that time in school where you kind of feel like you should know something, but you don't want to raise your hand and ask. I feel like DSCR loans, how they work, who they're for, when it's a good idea, when it's not a good idea. I feel like these are things that people really do want to know and maybe aren't asking. And so I think we're going to go through a lot of this content now, and it's going to be really helpful. So with that, I'll just say a few kind of housekeeping items. The number one question we always get is, hey, are these slides going to be available? Yes, these slides are definitely going to be available. We're going to email you a recording of this webinar. So better than slides, you'll get the whole thing, and we're going to send that to you tomorrow. So don't feel like you have to take notes because we will give this to you. Having said that, we also have a question box. You should see that on your screen. Feel free to ask questions throughout the presentation. We're going to get to as many as we can. Sometimes we get very specific questions, which are awesome, about like a deal, a scenario. Do you guys do this? What about this? I have got a property in this town. Please ask those as well. We probably won't answer them in front of the whole webinar crowd, but what we do is we will send those questions right off to your representative, and they'll reach out to you and you can have that conversation offline. So it's super helpful to ask those here. We can make sure you get the help you need. So don't feel like, there's any type of question you can't ask. With that, I think we can get started. We know your time's really valuable. We don't expect this to take the full hour. So we'll try to run through it here. But again, ask any question you want. We'll try to get to it at the end. And with that, let's go. So first, who we are. So this is like, is it clear really to start with who we are and not just get right into the product? We think it is because the Silver Hill Wholesale Network is kind of a new concept still. And so we want to be really clear about what this means. It's really, really cool thing that happened. If you're familiar with Silver Hill over time, familiar with Lakeview, you may know that we're all related to Bayview Asset Management. Very large corporation, 14.7 billion AUM, a lot of different business lines. And what we've done is we've combined our wholesale lending businesses. So for now, if you've been an approved Lakeview originator with us, nothing's changed. If you're closing commercial loans with Silver Hill, nothing's changed. You can see there that the solutions are available under these different entities, and that gets wrapped up into the Silver Hill Wholesale Network. So if you've been getting daily rate sheet emails from us and you're wondering why they look a little different, that's why. And so what's great about that is we're able to talk to so many more people. We're able to work with many more types of originators. And I think as a result, I've been doing these webinars for about 6 years, and this is a record attendance, record registration level. So that's really cool to see. It seems like it's a very interesting topic, and it's been very exciting for us to offer these solutions as a wholesale network. I think the last thing I'll stress here is that you have a partner with us. There's someone you work with. That's the same person. So what's really nice is that, as an example, if you're a residential originator and you're approved as Lakeview, there's no separate approval to close these DSCR loans, even if they're being offered by Silver Hill Funding, because that's just how we're able to work with you. And so I think it's really great because you don't need to meet someone new. You don't need to form a new relationship. It's all the relationship you know and trust. So it's very important, even though we put maybe the most generic stock photo of all time there with everyone's hand in the middle. It's actually appropriate, I think, this time. So the first poll question, this is important, I think, because we have so many people here today that we want to know just how experienced our attendees are with DSCR loans. That way we can be maybe a little more educational, or maybe run through it a little faster to get to specifics on our solution, what's new, because we've actually made quite a few updates. So that'll help us be as helpful as possible for you. And so with that, let me launch this question. And it's going to pop up on your screen right now. And a lot of people are already taking them, so that's great. I'm going to give everyone just a few seconds. Joe, I'm sure you're curious. I'll give the numbers out. Maybe just a few more seconds here because I see people are still filling out. And okay, that looks like, oh, okay, that looks like about it. So, Joe, I think this is perfect for the conversation we're about to have, because about 48% of our attendees here have not closed a DSCR loan in the last 6 months. So I think this is the perfect place to be, especially in January of the new year, because we're going to go through how these loans work, not just what DSCR stands for, but which types of investors are a really good fit for this program, how to identify those, and even, because I think this is just as important, when it's not even a good fit, because that happens too. And so hopefully the takeaway you get from this is, okay, I feel like I know what this loan is. I feel like I can do this. And also I have a partner if I do want to grow my business in this direction. So let me close that out. Thank you for everyone who took that. And I believe I'm back on the screen. So moving on, you can see it. All right, perfect. So Joe, with that, why don't you take over here and walk through what DSCR loans are, how they work, who they're for, so on, while I control the slides here.
Thank you very much, Zach. And so what is a debt service coverage ratio loan? Now, first of all, it is a smart alternative for investors for 1 to 4 unit investment properties that are, again, completely investment. There are fewer documentation requirements for these loans. It's a great plan B for folks that have tried the traditional route or the agency route and have been declined. And that is reflective in the terms of these deals. But as you'll see, once you start submitting some loans to us, we are very competitive from a rate and term standpoint. Now, what is really different about this, and for a lot of you that have done your careers in residential lending, is that it's a debt service coverage ratio based underwrite, which means we are not necessarily running debt to income ratios or calculating or gathering even the borrower's complete personal income. We're mostly concerned with the debt coverage ability of the property itself. So we're looking at single family, 2 to 4 unit deals, completely investment. And again, this year we know, if you read the news, they are anticipating multiple rate hikes this year. And so folks are on this call, you're the smartest of the smart, if I may pander to you for a little bit, but it's a great idea to diversify your portfolio. your business offerings, to grow your business with an expanded product set. Again, very big for 2022. No time like the present to learn something different or new, or for 52% of you, learn a different option to send your DCSR or DSCR loans to. So what we're looking for in a borrower, we do like to see experienced investors, and that means they have 2+ years of experience. The short way to think about it is we're not looking for first-time investors. We want somebody that pretty much knows their way around the block. These borrowers prefer not to use their tax returns for a number of reasons. One could be that they wouldn't qualify if we were underwriting the tax returns. They maximize the tax code, as we like to say in air quotes. They could be looking for cash out solutions to help fund new investments. Many of our alternative or other options that are out there in the marketplace are very restrictive with cash out requirements, cash out contingencies. We, as long as the property qualifies on its own merit, do not generally control funds or dictate what they can be used for, so long as we're not taking that money to Vegas and throwing it all on 17 red. These borrowers also, speaking of banks and agencies, might have difficulty working with them, or just don't have the appetite to go through what some of these banks and agencies require. They prefer a long-term financing option, a 30-year fixed rate, which we offer. And again, we have this, I see this about once or twice a week, where a borrower will send in an inquiry saying, I'm either at or above the agency limits, or I'm about to near there. I want to keep my number of properties financed down. And so they're willing to go outside of the agencies to be able to finance additional properties. So we don't necessarily count the total number of properties that a lender, or that a borrower has, rather. We do have limits on our own exposure, but it's not tied to any other loans with any other lender.
Perfect.
So when does this program make sense? Well, when the investor has trouble meeting debt to income tests, when the investor, and these are all pretty much intertwined, doesn't want to, knows he shouldn't or she shouldn't produce tax returns, and when they generally need more flexibility. What's cool, if you've been doing residential loans your entire career, and especially over the past year and a half have been doing a lot of refinances and taking advantage of the great rates out there, is that even if you've been working on traditional loans for owner-occupied residences, these borrowers are in your database. So think of all the borrowers that you've done loans for on their primary residences that are self-employed, that are real estate investors, that are small business owners. These are folks that you can tap into to see if they would be great prospects for a DSCR loan. What is DSCR, debt service coverage ratio? Many of you know, as you've closed loans before. Many of you that are new to this might not have a great handle on debt service coverage ratio. In the simplest way to explain it, it's the ability of the property, through the income that the property generates, to cover its expenses. So that would mean that the rents or investment income from the property would cover the principal, interest, taxes, insurance, association. So what that is different from is the borrower's personal income, which could include income from properties, include W-2 income, include additional income outside of their ownership of the property, and they would do an underwrite of the debt to income. So that would include debts like credit cards and other mortgages. So with this program, we're not concerned with all of that other stuff that you might find in a residential loan for an owner-occupied property or even other investment properties. We're essentially using a commercial mindset. So the property that the investor buying, can it meet its payments, and then some in some cases. For this program, we're looking for an even 1-to-1 ratio at the end of the day. Now, it says on the screen that no leases are reviewed. A big asterisk there, if you can imagine one, is that when the appraiser goes to see the property, there is high probability that they will ask for leases. So even though, we don't want to be contradictory, and you say, wait, you said I don't need leases. Well, the appraiser may ask for leases in certain cases. So just keep that in mind.
And I'll just jump in really quick before I go to the next slide, Joe, and say that like a lot of times we have brokers come to us who are interested in doing commercial loans. They've never done it before. I think we're going to get a lot more of that this year. And so I think this kind of program is a really good transition step to that. And I think that's one way to think about it. If it's new to you, that just getting into the practice of understanding how debt service coverage ratio works, what a commercial underwrite looks like, all that, those are some of the most important parts of closing commercial loans. And so I think if it was something on your agenda for this year, maybe a good gateway to that is this kind of program, because you can see you're already doing some of the math there that experienced commercial brokers do all the time. So let me just get to the next slide here.
It's a great point, Zach. Yeah, it's a great way to dip your toe into the commercial waters and before diving in head first. Great point. So this is the overview, a high-level overview of the DSCR solution with Silver Hill. As we mentioned, property types are 1 to 4. Has to be rental. Even if it's 2 to 4, we cannot lend on the property if the owner of the property lives in one of those units. We can entertain anything from a purchase to a cash out to a rate term refinance. We only on these offer a 30-year fixed, 30-year amortized loan. One of the updates we made to the program recently is the ability to go up to 85% LTV on a purchase, which is very aggressive for these types of loans. And even on refinances, whether it's cash out or rate term, we can offer up to 80%. So we're looking for a minimum debt service coverage ratio of 1.0. So we are, can go as low as a 620 credit score. My advice generally is to keep your site set as high as possible on these, because the lower the rate, the lower the FICO score rather, the rate does tend to jump significantly. So if you're dealing with a borrower with really good credit, you can really offer a strong deal. Okay. So no tax returns are required with this. Again, we are underwriting the income of the property. And this is something that is very advantageous for brokers, because this is not a loan that falls under TRID or the residential disclosure requirements. Brokers can earn money in 2 ways, and we allow up to 5 points compensation. That's not overly common, 5 points, but you have the ability to work up to 5 points between front end points in origination, which is disclosed on the settlement sheet and protected on the settlement sheet, and 2 points yield spread paid outside of closing, and that is not disclosed on the settlement sheet. And so in effect, many of our brokers will maybe charge a point origination and then maybe buy the rate up a little bit to earn yield spread. So I believe it is covered in more detail, but for a you can earn up to 2 points yield spread in increments of 1/3 of a point to the rate. So when you submit deals, you'll see what that looks like as well. So again, at the bottom, we list things that are new. I mentioned the LTV increased on purchases. Our FICO went down. I believe it was at 660. Either way, it's at 620 right now, as long as that debt service coverage ratio is there, which basically is the debt service ratio for all of our DSCR programs. And we do allow some properties with short-term rentals. So folks in the Northeast, I use the example of the Jersey Shore. You have a lot of short-term rentals over the at the beach, down the shores, they like to call it in this region. And we will take 5%, now just 5% off the maximum LTV. So those properties actually we hadn't done in the past. That is new for us. So folks that have maybe floated a short-term rental property our way, there are instances where we will do them. Okay. So let's look at some of the deals that give you some context. As if you were meeting a person, you would say, "Let me put a face to the name." Well, we're putting a face to the loan with some of these properties that we see on the screen right here. So you see a closed loan in Irvington, New Jersey. What I like to jump right to a lot of times is, the income earning capability of the broker. Think about 1 or 2 points on a $228,000 loan. You're talking about a $4,000 or $5,000 commission, depending on how you structure that. So that was a cash out refinance. Now, you drive by that home, it looks like a single family home. That's an investment property and low LTV, 68%, very good credit, 732. The net operating income created a debt service coverage ratio well above our minimum, 1.58, and you see the rate there was at 4 5/8. So that rate doesn't share here, but that rate may or may not include yield spread. It may or may not include the ability of the borrower to buy the rate down. So just keep in mind, don't hold these rates hardcore to the parameters we're showing. We're showing you the end result and what borrowers accept and agree to and close on happily. Here's another one in North Carolina. Similar loan amount. Okay, income one is a little bit less than the one in New Jersey. So we're talking about an income of 1.11. Again, if I drove by that house, it would not scream investment at me. But there it is, an investment property, 2 to 4 family, a purchase, again on a 30-year fix, as they all are. And then we go up to New Britain, Connecticut. That one does look more like a typical rental property, 2 to 4 family with a $190,000 loan amount, cash out refinance, another strong borrower credit-wise with a 65 LTV, a really strong debt service coverage ratio, rate much higher, so 6.5 than the other ones. So there might be a situation of a buy, the broker earning yield spread on this particular property and other parameters around the loan. And keep in mind, this could also be a product of when the loan closed. So over the past 6 months, our rates have dropped precipitously. That one may have closed a little while back when our rates were a little higher as well. So those are some good examples of the property types and what we see on a regular basis with our debt service coverage ratio loans. So at this point, throw it back to Zach. It will take us to the next portion of the program.
Thank you, Joe. And I actually can answer 2 questions. We're getting a lot of questions here, and I figure why wait to the end if they're kind of specific about what we just talked about. And I think we're even guilty of making our own mistake a few slides ago when I put this one together, because acronyms, like they'll be the end of us, especially in this industry. There's an acronym for everything, and we've got a question. What is PITIA? And that is an acronym for Principal, Interest, Tax, Insurance, and Association Dues. So that's what that is, and probably should have spelled it out because I don't really like using acronyms here in our marketing projects. That's what that is. Someone else asked because there are obviously a lot more guidelines than this. It's a very simplified look into the program. I would encourage you. We got some specific questions here to certainly reach out to your account executive, because they've got the full guidelines at their disposal. They'd be happy to walk you through every part. But questions about prepay, and that's a good one. And we have a couple options. So for the DSCR program, we have 5 for 5, 5, 4, 3, 2, 1, 3, 2, 1, or no prepay options. So again, if you have more specific questions about the program, what rates look like for specific scenarios, like the traditional matrix, all that, definitely have that conversation, because they'd be absolutely more than happy to walk you through every aspect. So with that, I'm going to launch our next poll question. I promise this is the last one. Thank you for everyone who answers. It's very helpful for our discussion. I'm going to throw it up right now. Now that Joe has shown you a couple of these kinds of scenarios, we're curious. Is this the type of scenario you're seeing today? And instead of being just simply asking yes or no, I added a third option, which is, I think so, but maybe I'm not looking in the right area, or I, of course, I obviously see these properties when I drive around town, but I can't exactly tell yet whether it's a good fit for a DSCR program or not. And I think that's an important distinction, because we have a lot of educational resources. We have a lot of ways to help you see whether it is or not. And so I thought it'd be way just overly simplified to just say yes or no. So I'm going to give everyone a few more seconds to answer. And kind of like as I suspected, so we have about 65, 66% saying, yes, I'm seeing these scenarios. And then over 30% saying I might be. And I think that's really helpful to know. Obviously, we see these types of deals all the time. We see properties, they seem pretty straightforward, but knowing when it's a good fit, when it might not be, that's the challenge, right? So I'm going to give about 1 or 2 more seconds, and I'll close it out. We are closed. Okay, I think we're back. Okay, so I'm going to take over here. These are quite a few little bullet points, so I'm going to make it easy. Just provide a few slides about how to close with us. Now, again, this is why we asked that first question, because if you regularly close DSCR loans, if you're a commercial broker with us, you get how this works. The pre-screens, what we get, what we ask for, what pretty much any type of commercial lender will ask for. But if it's new to you, this is good stuff to know, because it's not going to work the same way through your LOS. This is part of the conversation you have with your account executive. I feel like it's important to know this stuff just to create that internal checklist in your head. If in the last poll question you said maybe, which 33% of our audience has said, this might help you get that maybe to yes, I'm seeing this, or no, I'm not. So it's a pre-screen checklist. We have to look, credit score, credit history is super important. For the property types, why even mention that? Well, if you worked at Silver Hill for a long time, we are a small balance commercial mortgage lender. And so there are a lot of other property types we do, and we can help you close, but not through this DSCR program, because it's specifically for 1 to 4 unit investment properties. So there's a lot of other ways that we can help you. And if you are doing commercial loans, this, but I wanted to list that there. The flags are always going to be the same for us. When you're into the kind of commercial realm, those special use kinds of properties are typically going to be a no-go. And so not maybe as appropriate here for this 1 to 4 conversation, but I still wanted to list it there. And I got a question just now, like, so no mixed use? And that's right. So we have a lot of solutions for mixed use properties through whether that be our full doc programs or no doc program, like in light doc. We have many different options, but the 1 to 4 unit investment solution is really just for those duplex, triplex, SFR kind of properties. So, location is always going to matter. We encourage our originators to just use Google Earth, and just seeing it yourself is super valuable. We have resources you can see on our website, our eligible and ineligible states, and just how rural or not the property is. Those are kind of the big ticket items that we're looking for. And of course, ownership structure. We say, these 1 to 4s, they must close in an entity name, like an LLC. But that's actually a really big benefit for a lot of borrowers. And so it sounds like a requirement, but requirement and a benefit. And so that obviously there's more to it than just this. But if you're kind of looking at a scenario, thinking whether it might be a fit, not just for us, but for this type of program, these are generally the types of pre-screen items to keep in mind. Then, data points to secure best pricing available, because this is what it's really all about. And this is also just part of that pre-screen process to look for. Again, if you've answered maybe in that poll question, this could be another thing that you do. Just trying to get answers for obviously the credit score, the address, the property type, the estimated value, loan amount, purpose. Maybe it sounds like the basics, but until you really clear these out, it's really hard to know what you've got. And we find that a lot with originators that are maybe new to commercial lending or new to diversifying their business, is that it does help to kind of get back to the basics and try to find like these specific answers, because more often than not, the answer a few questions for yourself, the solution kind of starts to present itself. Like, this would be a good fit here, maybe not for Silver Hill, maybe for someone else. Like that, I think that is quite helpful. So moving on here, lastly, what we need to issue a letter of intent. That's what it's really about. LOI. See, I did a better job of of writing out that acronym. What we need to issue a letter of intent. Of course, we need an application, and if it's not ours, you know, we have other options there. The tri-merge credit report, rent roll, P&L operating statements last year's, purchase contract. As you can see, we're not listing the tax returns there, because that's not the way this program works, and that's a real benefit. You know, again, that's something that maybe you if you regularly close these loans, you would assume, but I feel like we definitely should stress it here, that is specifically a benefit of this kind of program if you are historically closing resi loans a different way. So as I mentioned, this is in the recording. You will get a copy of this. We have resources available that are actually a legitimate checklist that can be very helpful for you to keep on your desk. And then also, these are the kind of questions that when you get to know your representative of Silver Hill, if you don't already, that they will walk you through. So don't feel like you have to have this written down on your hand or something like that. This is part of the process. I'm sharing it here so that when you're looking at scenarios, you're starting to view them through the lens of closing them with Silver Hill. That'd be cool, right? So with that, I'm going to push it back to Joe. Joe, while you take over, anything else that you'd like to mention about getting started with us, pre-screening, anything like that, or did I kind of cover it?
Yeah, you did, and I'll just add in to a good. Forgive me if you said this. I know you discussed the checklist, but there's actually a section on our website, silverhillfunding.com, of forms you may need. So if you go into resources, you can see examples or templates of forms you can use that we might need. And the key word there is may. So that's all I'll add to that one.
Yeah, and so again, maybe I'm flipping the script here, Joe, and I apologize, but just seeing some questions that I can kind of answer that are appropriate right now. But someone's asking for investor experience, and that is important. Investor experience is an important aspect. Talk to your Silver Hill rep, your Lakeview rep, to find out like what exactly that means. But generally, the DSCR solution is a solution for experienced investors. Not as much for like that first-time investor situation. There are other types of loans available for those people, but that is an aspect, especially as you're screening, to look for. And we can be a lot more specific about that when you go through the full guidelines with your rep. So with that, Joe, you can go here. Just move the slide.
Awesome. So this is something that's really unique to the industry. That we had done in the past, and now we're reintroducing it. So for all intents and purposes, for the folks on this webinar, probably hadn't had experience with us back in the day where we did this $500. So it says on the screen, we lower the barrier for entry for borrowers to get more of your scenarios and process. This just went into effect a day or two ago, I want to say. But the way it works is this. Now, even with 1 to 4s, the appraisals can be much more expensive than your typical owner-occupied house. So appraisals can run, anywhere between $800 and a few $1,000. And so sometimes that can be a little bit of a barrier or even a delay in getting a loan in a process while the borrower decides how they're going to pay with this. A couple of things to think about here. So number one is we're allowing a deal to get into process with a $500 deposit. This is not a independent fee. This is a deposit that goes towards costs at closing. So one of the things that we will not do is say, pay for the appraisal and then your deal's in process. will say, give us a $500 deposit and your deal could be in process. And at closing, we reconcile the fees using that $500 as a credit. Now, in a certain situation where a deal might fall through and through no fault of the borrower, maybe an appraisal is ordered, maybe it isn't. But let's say the appraisal is ordered and something unforeseen happens along the way. There are instances where we will eat the rest of the appraisal fee, but we will not collect the difference at that point. So again, deposit up front and a lower barrier to get in the game. I will say this, especially if you do move into the commercial world as well, where you do the 5+ units in the office and retail space, you keep in mind, especially for those who've done residential loans for most of your career, the borrowers that we deal with for these types of properties typically view appraisal costs as number one, expected, and number two, a cost of doing business. So that $500 to them might surprise them, but in a different way. Oh, is that all? Oh, wow. And almost to the point where they're incredulous. So I've gotten asked a lot of questions, that doesn't sound quite right. Well, it is, and we're just trying to get the deal moving. We don't issue an LOI unless the deal really makes sense to us. So once they accept the letter of intent, that's when they would go ahead and pay that $500 to move the deal to the next step of the process. So really, really cool aspect of our new loans.
Yeah, and brand new for us, or we just brought it back, I should say. So if you're regularly receiving emails from us, first of all, let me say sorry if you get a bunch, but you should start to see those more often. We're doing that on LinkedIn. We're promoting on our website. Yeah, it's actually really cool, especially because getting the deal in is such an important step. And it's really something that I think a lender can do when they feel confident in their ability to close when they get to that step. So I think it's a good message to be sending, and also obviously a good deal for prospective borrowers. So anyway, let me move on.
Excited about that. All right, so this is give Zach a pat on the back. This is a really nice slide to illustrate how or whether you are approved. So, we market this webinar to our database, and a fair question is always, if I'm approved with X, can I do a loan with Y? Especially with the Silver Hill network of lending options now. So the way it breaks down is, if you're approved with Lakeview Wholesale, and if you've recently got approved with Lakeview Wholesale, you know that process is thorough. And I don't say that sarcastically, it is thorough. It's not overly difficult, but we get a great understanding of who you are, and we approve folks that most folks that apply with us, but we do it thoroughly. If you're approved with Lakeview, we do it so thoroughly that we consider you approved with Silver Hill as well. So if you are currently approved with Lakeview Wholesale and have a DSCR, scenario to go through, then you can be approved or submit a Silver Hill funding loan. Now, it does not quite work that way the other way around. So the one, if you are approved with Silver Hill funding and you want to do a residential loan, that's a whole different ball game. But for the sake of today's webinar, if you are approved with Lakeview, you can send DSCR loans our way, and we close them through Silver Hill. You are approved. Most commercial folks are happy doing commercial loans. The residential process is a whole licensing issue, an MLS number, all that good stuff. So, whole different process. Now, if you're not approved at all, that's not too difficult either, especially if you just want to get approved through Silver Hill. Either way, I can get you approved fairly quickly. The turn time on approval, if you have all your ducks in a row, is a day or two. If you need to gather stuff or you're so busy you can't get to it, then it can take longer, but it's pretty simple. You can see my information down below. If you're trying to get approved with both, then we will do a Lakeview Wholesale approval process, and I send you an invite via Commergence by Optimal Blue. If you're saying no, just want to do commercial, that's a little simpler. I send you an application, and you send me that with a W-9, and that takes a day or two. So very, very easy to get going. Neither situation takes a long time. But if you're already approved with Lakeview, good news, no further action needed on your part. You can begin submitting deals through Silver Hill Funding.
Awesome. Thanks, Joe. And I'll just say here that it was a pleasant surprise, actually. After our last webinar, quite a few commercial brokers came to me and you also, but I remember my emails and said, hey, that's, I do residential loans, just not with you, obviously before. How do I get that started? So we have a process for that as well. So if you've historically done commercial loans with us, didn't even cross your mind to do anything else because that wasn't an option before, that's an option now. And so I think there's value in having one partner for everything. It certainly makes life easier, at least for communication and for so many other ways. And so if that's something you're interested in doing, of course, a lot of other solutions that we're not talking about in this presentation, let us know. And we'll be happy to set you up. So with that, let me get to our last slide here. Then I'm going to try to tackle a few questions here, but here you go, Joe.
All right. So as Zach really explained it well in the beginning, the Silver Hill network of solutions includes Lakeview, which is our agency investor, conventional FHA, VA loans. Community Loan Servicing is the company that our jumbo solutions are licensed with. And as we talked about, your small balance commercial loans come through Silver Hill. So our email addresses are on the screen. In addition to shwholesale.com, which is pretty much like a global website of the whole network, specifically for small balance commercial and DSCR programs, silverhillfunding.com is also a great resource for you that I recommend. You can find us on Loan Sifter for agency pricing or jumbo pricing. Just be careful to search for the correct, or to be on the lookout for the correct company name, which is either Lakeview or Community.
Right, and so thanks, Joe. And this slide, I put it together and I was like, oh man, there's a lot of names here, isn't it? And so we get that. We're working to make it as clear as possible to you, and eventually there'll just be one name to know, one relation, one name, and that's going to be all a lot more simple. But for now, it's helpful to remember which products are offered through which entity, and that's what we try to do here. For any kind of DSCR information, you can find that on shwholesale.com. I got a question about the fee structure. And a lot of our fees for DSCR, for commercial loans, are available on silverhillfunding.com, and they will be available on our other site too. I just didn't want to throw a whole bunch of websites at you because that can be tough. And so what I will say here is that you see my email there and Joe's. Put us to the test. Like, just ask us and say, hey, please give me what I need here. We'll certainly help you. We'll connect you to the right person. We'll give you the answers you want and help you take the next step. So it's really all we're here to do, and we're excited to help. And we fully recognize that there's some new information here. There's some different logos. We're kind of looking like a NASCAR in a way. And so we understand that we want to help you and make sure that you feel really comfortable, confident closing loans with us. And if you have an existing relationship, making sure that you're able to do new products, new loans with that same relationship that you've had all this time, which is what's exciting for us. And so I have a few questions, Joe. Sure. I kind of want to, also be true to my word here and give people a little of their day back. But a few questions here about who's pulling credit, when is the appraisal coming in, what happens before, after the appraisal. A lot of specifics about the process of the loan. And what I would say for that is definitely schedule that conversation with your account executive. And they'll walk you through each step. I've created some infographic type materials. It's like a little assembly line process, which would really help you understand what happens when. It's kind of tough to just talk about over the phone here, but being able to visualize it, see it, and walk through it with your partner here at Silver Hill, I think would really be valuable, because more than anything, we want you to understand what happens at every step and not feel like it's kind of a mystery. No one wants that. And so we'll certainly help you there. I have one question, which sounds like a plant, but it's a real question, which is, hey, yes, Joe.
Yeah, I was just going to add one thing to that other one, just a general answer to also, because you're absolutely right. The process is outlined really neatly in that infographic you put together. So very clear. Just in general, the $500 deposit will trigger the appraisal order. That's when you accept the LOI, and that's when the appraisal gets ordered. Just to throw that one general answer out there.
Cool, thank you. Yeah, no, that's important to know. Another question, which I said, sounds like I put it there, but no, it's a real question. Do you have any webinars for commercial programs? And yes, we do. We have years worth of content that I would love for you to check out. Check out our YouTube channel for Silver Hill Funding. I put them all there. Check out our website. I put our presentations there. There's a lot of content to go through. You can go through at your own pace. And we're constantly creating more because we kind of see ourselves. I mean, I work with people here that have had so much commercial experience. Really, like everyone says they're the experts, but the people I know here at Silver Hill Funding truly are the experts here. And so, and even better than being an expert, they want to share the expertise with you. And so we have a lot to offer here. Ask us, check out for yourself. Love to help you there. But yes, a lot of content. My first option for you who asked that question would be to go to the YouTube channel for Silver Hill Funding. You'll see everything we ever did there. Including probably some early embarrassing ones for me. A few other specific questions, which again, I really appreciate you asking because I'm forwarding them directly onto your rep. But the last one I think I see here is pricing loans, getting rates, whatever. We see these links here for Loanlifter. We see, if you're an approved broker with Lakeview, you have your Helm, your Tavant account. It's going to work a little different here with DSCR. Your account executive is going to help you price these deals. And as you've seen with commercial, if you're familiar with commercial, all the different property types, all these unique features, it really pays to have that conversation. And it's like it's a conversation with your account executive, going through the scenario. What's really great about that is that the more you talk about it, the more clear it is that even if that solution isn't right, there's another one that is. And so that kind of can't happen until you really kind of talk through a few things. And so I would encourage you to do that if you have that scenario. And if you're not sure, especially if you're not sure, because we want to talk to you anyway, and we can probably help you find best fit, even if it's not us. And so with that, Joe, I think that's it. Really, really appreciate everyone taking the time in the new year. It's great, record registration. That always makes me happy. And it makes it clear that this is a good topic and something that everyone wants to learn more about. It's something we want to talk to you more about. So as our attending number drops here, Joe, anything you'd like to say before we sign off here?
No, we're looking, well, yes, I almost lied. Of course, we're looking forward to doing business with you. Get in touch with me if you need to get set up. Otherwise, you can get in touch with us and we can point you to your AE, or if you know who your AE is, feel free to reach out as soon as you can and tell them how excited you are to get going.
Awesome. That sounds great. Well, thanks, Joe. I appreciate your time. Thanks, everyone, for joining us, and we'll be in touch very soon with that webinar recording. Hope you have a great rest of your day. Bye, everyone.